Good afternoon, everyone. I'm Trish Taylor. I'm the co-president of the Georgia Production Partnership, and we want to welcome you to our December virtual meeting. Also want to remind you that this is a pre-recorded section of our meeting, and for our members only, we're going to have a special Zoom meeting right after our panel discussion, which you should have received a link to that and a password to get into it. If you have not, you can email vp@georgiaproduction.org and get that special link and password. But before we get into all of the good panel discussion, we have a few housekeeping items to take care of, and I'm going to toss it over to my Vice President, Darius Evans, who's going to tell you a little bit more about GPP.
Thank you, Trish. So GPP is a nonprofit member-based organization. Our main function is to protect and preserve the entertainment industry here in Georgia. I'd like to first recognize our immediate past presidents, Lisa Farrell and Clark Kofer. And I'd also like to recognize our all-volunteer board of directors. We just wanted to give a quick update. We had already announced that we were doing our winter fundraiser in December. Well, we've decided to push that back to January to give us more time to promote the event as well as to produce the event. So it's still going to be the Georgia Production Summit. The new date will be January the 15th and the 16th. We're still planning a very, very dynamic summit with dynamic sessions and speakers, as well as some great entertainment. So be on the lookout for more information about the change of date and when the tickets will be going on sale in the next couple weeks.
Thank you, Darius.
That's it. Thank you, Trish.
All right, we're going to toss it over to Lee Thomas with the State Film Office, who's going to give us an update on what's happening here in Georgia.
Okay, we got a great list today. So I'll just start right in because it's a long one. In prep, we have Black Adam, which is a studio feature for Warner Brothers. We have Black Mafia Family Season 1. We have Creep Show Season 3. Down in Savannah, we have an indie feature called Devotion. We have Doom Patrol Season 2, a television series. We have a new a new feature, First Ladies for Lionsgate. TV reality show Forensic Court. We have a studio feature, if you remember Ghost Draft, they're back for reshoots. A TV pilot, It's Our Time. TV reality show Monday Morning. We have a new TV series for BET called Ms. Pat. We have Step Up Season 3 is back, a feature, They Clone Tyrone. We have The Walking Dead Season 11. Tyler Perry's All the Queen's Men, which is a TV series. Also Tyler Perry's Young Dylan Season 2, also a TV series. TV reality, we have 1,000 Pound Sisters, a documentary called The Dark Side. TV reality, Ask Me Anything. Also Anchor Point, we have Archer Season 11. A TV series Architect for Disney Plus. We have a TV movie called Bad Dad Rehab 2. Behind the Curtain is a TV reality show. Beyond the Pole Season 2, also a TV reality show. Black Lightning Season 4, a television series. Building the FCF Season 1, TV reality show. We have Central Avenue Season 2, which is TV reality. Cop Shop, an indie feature. We have Critter Fixers, Country Vets. TV reality, TV movie called Deadly Reunion, Dish Nation Season 9, Divorce Court, Dynasty Season 4, Fan Reacts, a TV reality show, also First 48. We have Genius Aretha Franklin wrapping out. We have Heal Season 1 for Lionsgate, Instant Family, a TV reality show, also Jersey, a TV series for Disney Plus, Legacy Season 3, Life by the Ton, TV reality, Mama June Season 5, TV reality, MacGyver Season 5, Ozark Season 4, we have Serenity Now, we have Stargirl Season 2, The Lizzie Borden Tapes, which is a TV special, we have The Resident Season 4, and one more, T.I. and Tiny Season 10. So a full slate. Hope everybody has a great holiday.
That is amazing, Lee. Thank you so much for that report. Yes, everybody, please have a great holiday. All right.
Thanks, Trish.
Thank you, Lee. I am going to now toss this over to our wonderful moderator for today's panel, which is Production Finance. funding SBA loans and insurance. We are going to talk with Peter Bowden, who is the president and CEO of Visit Columbus, Georgia Convention and Visitors Bureau. I'll tell you a little bit about our moderator, and then he will lead us into the discussion. For more than 2 decades, Peter Bowden has been instrumental in growing all aspects of convention and tourism industry in Columbus. Since May of 2003, managing a staff of 8 associates with an annual budget of $1.8 million. Bowden's leadership, under his leadership, Columbus has set new tourism records for the last 15 years. He has worked to assemble a robust team and is head of the Columbus Film Commission to position Columbus as the 3rd film hub here in Georgia. He sits on several boards, to include the Columbus Cultural Arts Alliance, past president of the Presidential Pathways Travel Association, past president of the Georgia Association of Convention and Visitors Bureaus, Southeastern Tourism Society Advisory Board, and Georgia Department of Economic Development's Tourism Advisory Board, and many others. He has received numerous awards, to include most recently the Georgia Tom Kilgore Lifetime Achievement Award. All right, Peter Bowden, take it away.
Thanks, Trish. Appreciate that. Good afternoon, everyone. I want to thank everyone for being with us for this month's GPP meeting. I'm Peter Bowden, President and CEO of Visit Columbus GA, the Convention and Visitors Bureau here in Columbus, Georgia, as Trish has so eloquently described me through the biography that she just read. Again, we're glad that you're joining us for this month's meeting, and we've got a tremendous panel put together for you today, and we're going to be talking about a variety of topics, mostly focused on the production finance with our experts, and again, talking about everything from SBA loans, insurance, among many, many different things. And as I introduce our panelists, I'd like to get them to talk briefly about themselves, their background, and how it relates to film, and then we'll get into the detail of our meeting. So first off, I'd like to ask John Thomas, CPA at Element CPA, to tell our audience a little bit about yourself.
Hey, Peter, thanks.
Hey, John.
My name is John Thomas. I'm a CPA at Element CPAs. We're a entertainment-focused certified public accounting firm here in Atlanta, headquartered in Cabbagetown. Happy to be here. Thanks, Peter.
Great. Thanks, John. Appreciate that. Next up, Lynn Mathis, President and CEO of Williams, Turner and Mathis. Lynn, tell us a little bit about yourself.
Hi, Peter. I'm with Williams, Turner Mathis, which is an independent insurance agency. We celebrated 50 years this summer. It was a very quiet celebration due to COVID, but we have patted ourselves on the back. For about over 30 years, we have been working with the film industry and related industries. We are a full service agency, so we do all kind of business insurance and personal insurance and employee benefits. But we do have a special niche for the film industry and enjoyed working with that.
Awesome. Thank you, Lynn. Next up, our next panelist is David Leonard. He's Export Manager, Office of International Trade, U.S. Small Business Administration. David, tell us a little bit about yourself.
Hello, Peter, and happy holidays to everyone. My name is David Leonard. I'm with the U.S. Small Business Administration. I'm a past chief of finance for the state of Georgia. In other words, if you got an SBA loan in the state of Georgia, I signed off on it. So if there's any questions about programs and resources from the SBA, hopefully we'll be able to touch on those today. Thanks for inviting me. I appreciate it.
Absolutely. Thanks again. And finally, David Ennis, Senior VP, Entertainment and Private Banking with City National Bank in Atlanta. Tell folks about yourself.
Thank you, Peter. Yes, as you mentioned, I'm the team leader for our entertainment division at City National Bank here in Atlanta. I've been working in the entertainment business in one form or another for the last 35 years. Probably most of the last 24 or 5 of those have been spent here in Atlanta, and where we've covered a variety of music, film, television, and other media forms from private banking perspective.
Awesome. Great. Thank you. Thank you again, all of you, for being on with us today as we talk about probably one of the most important things about the business, the film business, which is the money piece of it. And I believe it's safe to say that our audience probably understands that filmmaking is about the bottom line, profit and loss, bringing the project in on time and on budget. We hear that all the time when we watch the different documentaries on how different films are made. And that even though the entertainment value certainly is the biggest part of that, because it's going to drive the dollars and cents and protect those investment dollars that are being made on a film, we're all chasing the dollar. So, and COVID-19 has changed every conceivable business model that I can think of. And so film certainly has been a part of that. So I want to start it off with Lynn and ask that with over 30 years of providing insurance for the film industry, I can imagine, and I'm sure like most folks in the meeting today can imagine that COVID-19 has really changed things. Can you talk a little bit about that and what you're seeing in the insurance business?
Sure. The COVID is it's a pandemic, and insurance is in place to take care of businesses when they have shown negligence. And so COVID is not really a covered peril for most insurance policies. The film industry does have a little bit of coverage, or more coverage than a lot of industries, because of civil authority that's part of the production portfolio that a lot of companies have. So if they were in the middle of a production and they were on set on Tuesday and then they couldn't show up on Wednesday because of the shutdown, then there is some coverages, some claims are being covered under that for those specific situations according to the policy terms and conditions. But there was never any intent for insurance to cover a pandemic. And so all the insurance companies are doing now are strengthening the exclusion that was already there. So I'm seeing some general liability exclusions coming in saying that they're not going to be responsible if the employer, the production company, gets sued because they were doing tests for COVID, or whatever safeguards they took didn't work. So, which means the production companies, everyone has to practice safe risk management. You do what a reasonable person can do. You follow the guidelines that have been set up by various film authorities and the state of Georgia's the governor plan to help hold businesses exempt from liability. So you just work within your own risk management.
Right. Okay. So a little follow up. Yeah, a little follow up there before we move on to something else, is that if production does have its risk management plan in place and it's reviewed, does it have any bearing on any type of protection for the project whatsoever, or has, as you just said, is it just something that's being totally excluded because of the pandemic?
For most companies, it's going to be excluded. If you think about it realistically, somebody comes up and says, I have COVID. Well, they don't know precisely where they got it. So it's different than a workers' comp claim where somebody falls off a ladder,
right,
and you saw them fall, then obviously that was work related. I do know some production companies underwriting, especially for new accounts, they want to know what they're going to do.
Right.
They want to make sure that they understand that they should have measures in place.
Right. Okay, great. Appreciate that. I want to come back to you in just a few minutes. I've got some additional follow-up about all of that.
Okay.
John, I made a note in your bio that one of the goals that you stated was that you help clients implement strategies to cultivate growth. Can you talk a few minutes about what kinds of projects you're typically seeing? Are they big, small? And then as a follow-up to that is how are you creating a strategy for success for those companies that come to you?
We're seeing all kinds of projects. I think it's really encouraging to hear Lee's list this month. I mean, man, what a great list of projects, from indies all the way up to studio and television network projects, all shooting at once in the state of Georgia. The sound stages are busy. I think from what I've heard over the past couple of weeks, I don't think that there are many vacancies, if any, on Georgia's sound stages. And our clients are taking advantage of that. Our clients, our clients range from small independent producers to, reality TV to producers that do projects for, in-state, out-of-state feature films. And so we're seeing all of that happening right now. For us, we didn't really know what to expect heading into the shutdown. And so we just sort of monitored our independent producers very, very carefully to just see how this was going to affect them fiscally. And for the most part, independent producers are used to feast and famine. They know what it is to be in a development cycle, and a lot of these producers just went into a development cycle. There's a massive demand right now for content headed into the wintertime, and so we're seeing a lot of money move into independent productions. We see over-the-top streaming networks buying a lot of content that independent producers have been keeping in their back pocket for a rainy day. And so there's projects happening all over the state that we're seeing cert with Lee Thomas's office recently that were originally just sort of development projects. Netflix is coming in and buying content and boosting up production dollars. So we're seeing a lot of that. From our perspective, we've tried to help people through a number of different programs this year. We'll hear from David, but we've helped him through PPP, and we're going to talk a little bit about that later. But the SBA programs, finding debt, just being cash positive as much as possible, keeping expenses down. Those are the big things on the mind of independent producers. Gotcha.
All right, great. Thank you for that. David Ennis, let's talk about lending packages. Let's say that I have a project, and what should I expect when I come to the bank? When I come to you, what should I expect? What do I need in order to get my project moving forward? Has anything changed?
Well, great questions. First off, here at City National Bank, we try to be very consultative, and everything gets put together kind of on a customized basis, whether it's full production finance request or anything in between. We are wanting to sort of be very, plugged into the conversation in terms of, the plans to sell the project. Is it going to go straight to streaming? Are there distribution agreements with the streaming companies in place already? Are they waiting on some aspect of the project to be completed before that part happens? And to your question about change, yeah, there's a lot of change out there. Obviously, the formal, I should say, foundation of film finance really and truly is a factoring process of pre-sales around the globe in all the various territories that normally participate in buying content from the United States, or it's made in the United States. That's all kind of thrown for a loop now because nobody's going to theaters, right? So they're releasing projects on the cable TV and pay-per-view and other places that are non-traditional sources of revenue, and probably less revenue than obviously they would be getting otherwise. So there are some challenges. What we're trying to do is, continue to look at each individual situation and look at the contractual pieces that are in place, assess those, and then be able to make a judgment about, what aspect or what type of role we can play.
Okay, great. Certainly makes sense. Like I said earlier when we started, is that practically every business model has been impacted by this. So I can only imagine what you're getting at. Yeah. David Leonard, can you give us a typical scenario of what your office provides when you're approached by a filmmaker, producer, or is there a typical business model that's coming out of your office today?
Well, one of the interesting things that's happened with SBA as a federal agency, we used to have somewhere between around about a 16% market penetration with the small business in the United States. Because of the pandemic, 72% of all small businesses, and this is what census is telling us, and the numbers going up, 72% of all small businesses have received some type of assistance from SBA. That's huge. So we provide assistance in multiple ways. We take the information that John would provide, it goes to our counseling group, and they go ahead and help put that into a package that's something that David can use to go ahead, and if he decides he can't do something conventionally, he can use an SBA guarantee to put a loan in place if necessary. So that we're the bullock and the liaison between these markets. But everything starts right now. What I want to bring up first of all is some of the disaster program. Part of SBA is we are the lender of the U.S. government as a disaster. A lot of the programs have ended. PPP that John mentioned a moment ago has ended. We're in the forgiveness stage now, and you need to be working with your lender, with David, to go ahead and work towards that. The grant programs, a lot of those have ended, but there is still an economic injury disaster loan that small businesses can apply for out there. But there's a deadline. It ends on December 18th. So I want to make sure that everyone, if you're thinking about doing this, first of all, reach out to one of our counseling groups. We have one called SCORE. In SCORE, we actually have counselors that are available there to help independent film producers specifically in this market. That's very important. We also have counselors through the University of Georgia, through our Small Business Development Center, that have offices throughout the state of Georgia to help you go ahead and work towards your business. And they can also help you apply for this economic injury disaster loan that I'm talking about. It's a term loan set up over a 30-year period of time for lost working capital, where businesses may have lost capital due to being impacted by the pandemic, like we've been all talking about here, and they can get loans for that. For those businesses that have already received an EIDL loan, an economic injury disaster loan, we love acronyms in the government, forgive me there. For those of you who received an economic injury disaster loan, that you can ask for an increase. You can work with the counselors and ask for an increase in the loan. If unfortunately you are declined for some reason, you have the right to reconsideration, and you can apply for that, and we have classes to teach you how to do that. So in terms of the full gamut of providing assistance from thinking about starting a business, I've got a business, I need to grow my business, what am I going to do based on the circumstances today? I need financial assistance, I need other avenues, because that's one of the things I work into, because it's not just a domestic market, it's an international market. And I work in international trade where you've got to export your product. And you have to think about those two cash streams, the domestic and the export financing coming into you as two different resources, because when the banks look at those, they look at those separately also.
All right, great. So on this, you mentioned earlier about the forgiveness portion of these loans. Is this something that you're seeing a lot of right now, or is this process just now beginning to gear up in this respect?
It actually started back towards the latter part of the summer in September. It was actually a set timeline based on one of the Paycheck Protection Program, PPP, when it was approved, and the banks have the process to go ahead and start that. They're already setting up their portals where you can go in and start submitting your information. That was the whole idea about PPP, is using the money as required, and so that it turns into a grant. You don't have to repay the money to the government. So that's really important to work with your the bank and making sure you understand that. If you have a problem, again, you can go to these counselors at UGA and they can help you put that information together. I'm sure John's organization, go ahead, as a CPA, a lot of times your information, putting that together is critical. And he would probably be the person to talk to about that. But where it actually goes to, it's like the banker, like David. That's who brings that information in. They have a portal to bring it in and look at the forgiveness, because you want to turn a loan into a grant. Absolutely.
All right. Thank you for that. Lynn, let's circle back around to you, and let's talk a little bit about completion bonds. Can you describe what a completion? Can you tell the folks here on listening that what a completion bond is? And then are you seeing this as something that is available through your office or other providers?
Sure. A completion bond is the it's used to guarantee the financiers that the project will be done in budget and on time. And there's probably 2 or 3 players in the industry that provide completion bonds. And the reason is they look at what the production company comes and says, this is what our production schedule is going to be. This is how we're going to do it. And if the completion bond decides to extend coverage, they have the right to come in and take over production at any point that they think that the production company is not going to stick to the budget. So it's pretty serious arrangement, and it takes a pretty specific bonding company to have the ability to come in and do that. So if someone came to me for a completion bond, I would direct them to one of those players, one of those people that are still offering it. To put it in perspective, the minimum they're going at, as far as I've been told lately, is 5 million. So if your project's under 5 million, you're not going to get a completion bond. It's kind of like building a house. It would be better to put the money over in an account and have the contractor draw, or the production company draw from the money as they show that they have done this much of the film, or this far along. So it's there, and some of the people who are giving money want to see that COVID is covered, and right now they're not extending coverage for COVID. So, time will tell.
Thanks for that. David Ennis, let's talk about loans and guarantees. I can imagine there has to be a lot of red tape that goes on in this process. Can you talk a little bit about what these loans require in today's world? And we just talked about completion bonds. So what sorts of things are you guys looking at when you're putting together a package?
So there's a couple of options. Typically, when we have filmmakers that are budgeting between, call it $5 and $10 million, typically those are going to fall into our production group for more advanced underwrite, and on up from there, obviously. In our marketplace, as we're looking to try to help promote the organic growth as much as possible of independents and other folks that are building their affiliations, we want to be able to offer them what we consider to be kind of more of a private banking structure, meaning if they're out seeking investment and they're exploring whatever their capabilities are going to be under the tax credit opportunities that they have here in Georgia, we can look at funding for and bridging for investor funds by asking those investors to participate in the lending process. And then whatever agreements that they're making with the production itself are sort of separate of that, but it allows for some funding to be available without tax consequences and other things for people to go into portfolios or pulling money from sources that could create a tax event. So we try hard there to think through those scenarios. And then most of the time, as I was saying earlier, there's a factoring process in this, and it's complex. I don't know that I want to completely lay that out in great detail, because there's a lot of variables. All the things that Lynn was mentioning are right now front and center. How is the project going to get insured? Where's the COVID policies fall into place? Is a completion bond even realistic at this point? A lot of productions have flat stopped because they can't get completion bonds. So therefore the banks can't lend. That's a security element for us in that. What are the distribution channels? Who is the talent? Who are the directors? Who are the producers? All of those pieces add value. And what I was, when Michael and I were first chatting about this, I mentioned it to him, it's sort of like evaluating a business, in that, when you have put all these elements together, you have an essential beginning valuation of what the project is worth just based on those elements. There's some secret sauce in that, and some factoring and other things with respect to talent, directors, producers, etc. But there's also the sales agents part of it. There's also the demand piece of it. The good news is, for creators now, there hasn't been a better time to be out there creating content, putting content together. There's tremendous demand for content as people are competing with each other. Apple's competing with Netflix, Amazon, and you go on and on and on with the various providers. So it's a great time to be out there doing it. The issue more, I think, for most people is getting those first things solved for, how it's actually going to get made, and then how it's actually going to get sold. And once we've sort of solved for that, then we as a bank can know what gaps need to be filled, meaning P&A, or meaning that we can finance this portion of it. You'll have tax credits for this portion of it, and you can kind of break that down, but it's a much more difficult underwrite at this particular time if you're brand new to it, or you don't have a long-standing production company with a track record. So you have to work through some of those things. And then, like I said, we're more than happy. We have conversations every day about these things. We're very consultative. We may not always be able to get right to where somebody is asking us to get day one, but we stay committed in those conversations and build on our relationships and work to try to help creators as much as we can.
Oh, incredible. Yeah, I think I have binge watched just about everything that there is available. So I certainly understand that there is a tremendous demand for new content. So thank you for that. Hey, John, let's switch gears for a moment. And with the legislative session, on the horizon, I know we've still got to go through the holiday and so forth, but let's face it, everyone's already gearing up for the next 2021 legislative session. Let's talk a little bit about the Georgia film tax credit programs. It always seems to be on the radar. Is there anything that you're sensing out there that the industry should be aware of?
Well, I think so. Actually, let me add one more thing to David. I think he made a really great point about the planning stages and funding. And so, as it relates to Georgia specifically, Lee Thomas can attest to this, that her office, when they're doing their due diligence, really appreciates proper planning, and production's coming to the table with the full package ready for the film office to serve them. And it's a little bit of a chicken and the egg thing with banks, looking for folks to have everything sort of wrapped up. I would encourage independent producers coming into the state to go to the film office very early in the process. Sometimes they work with the banks, they get everything together. They don't have cash in the bank necessarily, but when they put their application in, the full picture is not painted. So just to kind of tack on that, there's some really good actors that do a really great job of that, and not so good ones that require a lot of remediation from Lee's folks, and end up coming to folks like us to ask for some help there. But to answer your question, these tax credit programs are under attack all over the country. Everywhere that you see a film incentive, you see budget discussions at state legislatures, and that's no different in the state of Georgia. And so for a number of legislative sessions in a row, the credit has been questioned. But most recently, it was shored up quite a bit. I think everybody at this point, for the most part, is aware of what happened last year. There were a couple of state audits of the program that highlighted some areas for improvement, and we're actually really encouraged by the 2020 legislative session took it to the finish line and completed some strengthening of the program, including an audit requirement that's going to be phased out in the next couple of years, and then some further strengthening of the program in terms of the due diligence that's required by the DOR and DED to hopefully help protect this program for a while. That doesn't mean that there aren't still some things being discussed, at different levels of government within the state for the upcoming legislative session, and we think that we're going to see some discussions there. They're already happening kind of behind the scenes, but hopefully the strengthening of the program that we saw most recently will carry it through for a while. It's a strong program, and from different folks, you'll get different ideas of its benefit. But there's a lot of consensus around the overall benefit, jobs and growth and economic impact. And Georgia is becoming one of the few places in the country that's developing a true infrastructure for film, which is what Data was talking about a little bit there with organic growth of independent producers creating brick and mortar and jobs and a true studio environment, like you see with some of the local companies vertically integrating and creating more permanent production in the state.
Right. Yeah, completely understand that. And that's it's just interesting. You mentioned in your response to that incentives. I want to talk just a little bit about what's happening in Columbus in regards to that. We actually 2 years ago launched an incentive program of our own. When Trish was reading the introduction, we talked about that one of Columbus's long-term goals is to establish ourselves as a third film hub in Georgia, so that we sort of have this perfect triangle of how to do work in Georgia. And this program actually set up in order to cover the cost of working outside of that Atlanta area. So there is incentive cash, a form of grant that producers, filmmakers can work with here in Columbus and this is in addition to the state tax credits. So not only do you have that benefit from the state level, but working in Columbus, there is that incentive where you can earn as much as 20% of the spend here in Columbus. So of course there's an application process and so forth, as any kind of granting process goes, would allow for itself, but that's what is really key to this, and it's meant to complement what that state incentive, state tax credit has got in place. So we're super excited about that. And of course, as you mentioned, the goal is to create that indigenous workforce, not just in Columbus, not in just Atlanta or Savannah, whatever, but across the state, so that this industry perpetuates itself. And that's why I think Georgia has become that mecca for filmmakers, is because of it's an easy place to do business in. Let's talk about our Georgia, the economic impact of how film is working in Georgia, putting Georgians to work, building and establishing a homegrown industry. And Lynn, I want to talk to you for a few minutes. Is that if I only have 1099 workers, employees on my project, are we still looking at workers' compensation? Is that still necessary? And are there any other kinds of insurances that might be required? And then, of course, finally, is someone wanted to reach out to you to do a little bit deeper dive in that. Are you a good source for that sort of information?
I hope I am. The question between a W-2 and a 1099 is a huge one that I have daily with people. The IRS has a definition of what an employee is and what a independent contractor is, and you can do your tax. Treat their taxes according to what their position is. The Workers' Comp Board has another definition for an employee, and their definition is if it's a person and they're working under your direction or control, they're your employee. It doesn't matter if it's 2 hours, if it's full-time, but direction and control. So when the production company tells the crew, we got to be there tomorrow at 8 o'clock, they're your employees. Now, there are true independent contractors in the film industry. So you have somebody who you drop your tape off and say they're doing post-production for you at their own facility. You don't know if they're doing it at 2 in the morning or 2 in the afternoon. That's an independent contractor. Or somebody's writing script for you. You don't have direction and control. But for the people who are working under direction and control, they are employees. And how workers' comp is rated is it's total payroll paid. It doesn't really matter to them if it's 3 people or 1 person. You just add up the payroll at the end. We could get into a lot more. Corporate officers can be excluded. There's all kind of other nuances, but basically, if you have somebody working under your direction and control, even though you're paying them as a 1099, they're your employee for workers' comp purposes. And it doesn't impact, the IRS can't come back to you and say, you got to pay them as a W-2 because you had them under your workers' comp. That can't happen. So you can get a workers' comp policy, or some people will use, there's a lot of film payroll companies that are set up just for that purpose. So you can run your people through that. It costs a little more, but they're doing a lot of work too, for their fees. So that's an option. A lot of other people also don't have anybody that's being paid. They're volunteers. So in Georgia, volunteers do not have to be covered under workers' comp. But there are ways we can provide coverage if you want your volunteers to be covered. There is a volunteer accident policy that provides coverage, and it's not very expensive, and it is something that a lot of production companies will do if they know that they're getting their friends to work with them and they want to know that there would be some coverage if something happened.
All right, great. Thanks for that. I think that's really important as we all try to navigate the changes. That there's some things that just simply haven't changed. So I think that's critical for our viewers, our audience to know. David Leonard, you've been too quiet. I need to ask you something about, when we were talking earlier, you had talked about that you have someone in your office that specializes in film as far as consulting and helping these projects move forward. Can you really kind of get into a little bit of the weeds with that to kind of give us an idea of what sort of services this is available to someone who's looking to make a project?
To some extent, yes, thank you. But the counselor we're talking about, SBA, is the host for 4 agencies that are used nationwide that provide counseling services. SCORE, like SCORE Touchdown, is one of those organizations. The counselor we're talking about is a volunteer with SCORE, and the state director of SCORE specifically guided me to this individual. You can go to SCORE and request counseling under film production or independent productions, and they would assign you to him. He can provide information about, where the resources are. A lot of the things that you've talked about here, where can you get the grants, tax credits, all the different ways of how. The most important thing is structuring your business that you've got a great idea into a fundable relationship. It takes the resources of my other partners here on the call, as John pointed out, and David has pointed out the services they provide, but he provides that organic beginning information to get you to a point to where it's really important, so where you can go ahead and work with these folks and seen as a viable candidate. The counseling is free. There's no charge for that. Also, we have a separate set of counselors that if you're just looking to look at my business, my film business, what I need to do to go ahead and look at my business, what I need to do organically to go make sure that I'm a good, solid business. We have another whole set of counselors at the University of Georgia that provide that. And then to the side of that, we have specific counselors just for veteran-owned businesses and for women-owned businesses also. So we have a complete group of folks that do that, but I would recommend for anyone just getting into it, especially what I felt was part of our focus today, the independent film industry, the SCORE volunteers are where I would recommend reaching out to first of all.
Excellent. I believe we're going to put all of this information in the captions before we conclude today, so everyone knows how to reach you in your office to get that process started. So thanks for that.
No problem. Thank you.
Hey, John, we've been talking about loans and different kinds of business models. Can you talk a little about Section 181 deductibility and that additional return on the investment to support investors? And then when you finish, David Ennis, I want to ask you to jump in there and talk about how this is going, or does this affect deals that are being put together?
That's I love the way you asked that question, because it all is interrelated. I mean, it's the independent producers going to investors aren't always very well equipped to talk about the entire return on a potential investment into an independent project. And so oftentimes we've got to kind of list out all the benefits to these investors, depending on how the deal is structured. And the deductibility of the film expense is one really important component to that. A lot of Section 181 is kind of a buzzword in independent film. It's something that producers kind of carry around and talk about. And most people understand how it works. Sometimes folks don't exactly understand how it works. And there are a lot of different strategies around that to help benefit investors. But on its most basic level, Section 181 is a provision in the tax code that allows for a qualified production company under the code to deduct that year's worth of production expenditures immediately in the year that they were expended. Which, as you can imagine, if you're an investor in a film project with passive income from other investments, real estate investments, any sort of investment, and that's a passive activity for you, meaning it's not your everyday job. Having that immediate expensing of that investment that you put into a film is very, very important to your tax position, because you're able to push income from other investments down the road by taking that immediate expensing. And that just really resonates with investors. And so being able to put that together, that tax advantage with David's package, when you talk about using funds that aren't in your portfolios, is a massive benefit. And I don't want to step on your toes, David, but investors they're coming into their decision-making process with, generally, there are some hobby investors out there, but generally, if it's a serious investor, they're coming in with ROI first and story second. They do care about your story. More than that, though, they care about what talent is attached, what other sort of business qualities it has, what benefits it has in the marketplace, is it sellable in this market or overseas. Those things carry a lot more weight than how they feel about any specific story. And sometimes that can come off as sort of a crass conversation with a producer that really cares about their project. And so it's important that they think about those things. 181 is just another benefit. What I would caveat there in saying about 181 is that it's going to expire at the end of 2020. This is a game that we're used to playing over the last decade. Is will they extend it? Won't they? They did not extend Section 181 at the end of 2017 for the 2018 tax year, and we had to actually wait until the Tax Cut and Job Act of 2018 before they reinstated it for 2018 and 2019 and extended it to 2020. But it's about the sunset. But there's a December song and dance that happens in Congress, and we hope this will be a part of it. Before, and I know I'm really interested to hear what David has to say about how that all plays together. One thing I would add on PPP funding, this is important for anybody that got PPP money. The IRS just this morning reiterated the fact that you cannot deduct expenses that you use PPP money to pay for. So any payroll that you retired paid for with PPP funding is non-deductible as it stands right now. As a part of these extenders at the end of the year that we routinely would see 181 be extended with, Congress can act and change the law itself and make these things deductible. And there is a lot of there's signaling on that topic. There's a lot of congressmen, congresspeople, and senators who are not happy about this. And they may act, but they may not. So I encourage everybody to tax plan around the fact that you're going to pay tax on the PPP funding that you get.
Great, super. David Ennis, how's this impacting your business?
Yeah, so to dovetail onto John's comments, for investors, obviously this process is all about risk mitigation. So to have tax advantages, to have tax credits, to have other means, to have senior debt, in play is all a part of a risk mitigation strategy that ultimately can get them to a comfort level, a lot quicker. But it is a very challenging time and challenging process. And, I would recommend having somebody like John on your team. If you're an independent producer, or you have, the opportunity to have some content that's highly regarded in terms of festivals or other things, and you're on a track. I think it's very important. We stress all the time around here that the team around you is crucial in these matters, because they can give you the proper advice. We're not CPAs here at City National Bank, and so we're gonna rely on the expertise of others to also guide our process and to help us understand what these investors are looking at, where they're going to be able to have savings, what that might allow them to do from a borrowing perspective, and other aspects. And by the way, I haven't mentioned yet, but we're routinely involved with folks like John and others in the production account process. And we're really efficient with control agreements and all the things that govern the disbursement of budgets. So if we're not lending, chances are we're helping you manage the budget with your production accountant. And again, around here, we rely on a team of experts outside of just the banking world. So it might be a business manager, it might be a CPA, it's certainly going to be an attorney at some point. And the more we know who those people are, and the greater the collaboration is, the more likely good things are going to come out of a potential funding discussion.
Great. All right. Thanks for that. I mean, it's we've talked about it. It's all about the financing and putting these deals together. We've just got a few more minutes left before we have to end this. And David Leonard, again, we were talking earlier about the 5 C's. In the few minutes that we have available to us, can you quickly run through those, what that is, and why that is so important to filmmakers when they approach anyone that's on the call here about doing their project?
Yes, when you're talking to any of my lending partners, and keep in mind, SBA pretty much does business with every bank and credit union in the United States, and a lot of non-bank lenders. One of the basic underwriting or evaluations that we've been talking about, and the information we have to put together, are what I call the 5 C's of credit that you referred to. The first is character, where they're looking at your credit worthiness, your credit history, something about what you were talking about earlier about your reliability. One of the things SBA adds to that you have to be aware of is you have to report your criminal history. That normally banks don't require you to do. They're going to require you to do that, and keep in mind that nothing's expunged from your record there. Second is capacity or cash flow, your debt to income or the cash flow of the business. Can you repay the debt from the cash flow of your business? Third is capital. This is the old skin in the game. Do you have skin in the game? What's your equity in the business? What do you have to go ahead and provide that you put into the business? Next is conditions, and this is something we're talking about. I think is really important right now, as both of the experts have pointed out, is we're in a unique period of time right now where content is king, and that the competition, the growing industry, being prepared is important. So looking at these information is important. And then last is collateral. This may be the assets you have to pledge, and in some cases it may be where you've got guarantors. You brought in outside guarantors or investors that are going ahead and add strength to your project. Those issues need to be addressed, and that's something the counsels I talked about at the beginning can help you with. One of the key things I want to close with on this, in addition to the counseling, as I point out, is free from all 4 agencies. Right now, the training, a lot of times, the training classes are free too. Under the CARES Act, that's paying for training. So you can go out and get the training for these particular classes for no cost.
Great. Thank you for that. I want to thank everyone on our panel for your insight and your expertise. It is truly appreciated. I mean, as we all work to keep this industry moving forward and continue to dominate the film industry in North America. Again, I want to thank everyone who's been a part of this conversation, and I hope it's been beneficial to the audience.
Absolutely. Thank you, Peter, for your project here and for being part of our moderator series. And everybody, we want to thank you from the bottom of our hearts from GPP for being on this panel. We also want to send out a thank you to Harold Sellers, who's going to help us edit this section of our GPP meeting. We also want you guys to know, we realize that holiday times can be very stressful. It can be a happy time and it can be a sad time for many people, but we have some resources that we have listed on our GPP website. So if you feel like you're being stressed during the holidays, please go to our website and check out the link that is there. We also, you go to the Georgia Crisis and Access Line at 800-715-1225. Also, we want to mention to our GPP members, right after this, we have our meeting, our special Zoom meeting. So please make sure that you have your email link and your password to get into that, and you will hear all the things of us wrapping up GPP for the rest of the year. Darius, I'm going to throw it to you for some final words.
Yeah, so I just definitely wanted to remind everyone that if you have not received, if you're a member and you have not received the link to the meeting after this one, please email us at vp@georgiaproduction.org and we'll make sure you have the link to the meeting. Otherwise, everyone, please stay safe and thank you for joining us.
Thank you, everybody, and stay tuned for more information through our e-blast about our January meeting, and happy holidays, everyone.
Made it.